Hey, Kyle, it's really good to see you. I have an important question. Should you really be exchanging that annuity? Before you exchange an annuity, there are several questions that you should ask yourself first because there are many situations when an exchange or transfer is not a good idea. But I want to start with when should you consider transferring or exchanging your annuity?
That's an excellent question, Erin. And first, I want to point out the fact that I think that annuities do get a pretty bad rap in general.
Yeah.
And I think that's kind of a disservice to a lot of people. So I want to break down real quick what is an annuity. These are not newfangled concepts. Investopedia actually has a really interesting article about about the history of annuities. And they stretch all the way back, documented history, to ancient Rome, believe it or not.
Mm.
And so it's not like they just came out a couple of years ago. But really, the annuities that we work with, fixed index annuities, they are offered by life insurance companies. And life insurance companies, they practice risk management. And we all know what life insurance is, right? It insures you against the risk of dying too soon. Well, annuities really are, the fixed indexed annuities are basically trying to protect you from the opposite. What happens if I live too long? And so that's why they use a lot of income oriented features in these annuities. And the question, when do you replace? Well, annuities are interest rate sensitive. So as interest rates come up, usually just like CDs and money markets, these products become more attractive to investors. So it's a good idea to take a look at these annuities because rates are high.
Okay. So, why would you do an exchange into a new annuity or other insurance product instead of transferring to a different investment vehicle?
That's a good question. To answer this one, I want to zoom out just a little bit, take a
Okay.
quick step back because it's all about the plan. So when we meet with clients, we do a full financial plan with them. We do an income plan as part of that. And so if you have an income shortfall in your plan, we may use an annuity to address that, either one with an income rider or one that's going to support consistent withdrawals for the long term without the market risk. So you may want to look at what purpose is your annuity serving in your plan, and that's when you can answer that question.
Okay. So, I do want to walk through a few red flags if your advisor is suggesting you exchange your annuity. The first red flag is if you're still within that surrender charge period.
Right. So this is generally known as kind of the Achilles heel of these annuities, right? This is usually a negative that people point to. But the fact is that the annuities, for example, if you deposit $100,000 into a fixed indexed annuity, don't expect to go and take that full 100,000 out the next day. There are definitely withdrawal limitations that are placed on a lot of these, and those go down over time, right? So over several years, the limitations get smaller. If you're at the end of your surrender period and you need that money, it may not be a good idea to reset that cycle anew, but it's all situational and it depends if you have an income rider as well.
Mhm. All right. The second red flag is that you're not offered any added benefits or, as you're mentioning, a guaranteed lifetime rider.
This is another good point. These products have evolved so much, especially in recent years. The two big enhancements that we've seen to these products are improved income features, improved income riders. You want to take a look if you need income as part of your retirement plan. You really need to give a good look to an annuity and then that specific annuity and its income features. The other thing is the long-term care provisions that are built into some of these now. If you're 62 years old and you have no long-term care insurance and no life insurance that's kind of a hybrid, it's going to be really expensive to go and insure yourself against the
Of
risk of
course.
long-term care.
Mhm.
But you may be able to use an annuity to kind of help you bridge that gap, so to speak.
Okay. And last, I mean, this one we've heard many times before. It sounds too good to be true.
Right. This is a big one, Aaron, because I've actually had some people come into my office and tell me, "Hey, I had this guy tell me about this annuity. It's amazing. I get a 50% bonus day one." Please be really careful when you hear stuff like that because that sounds way too good to be true. While some annuities do offer you a bonus, it's usually going to be in that 8 to 10, maybe 12% range in terms of the account value. If someone's offering you a 50% return on your money day one, you need to be really careful with that, understand the product a little better, and maybe get a second opinion. That's what I would recommend.
Kudos to that person though who came to you for a second opinion.
Yes, absolutely.
Right. Well, so Kyle, if somebody would like to talk through, exchanging or transferring an annuity, or if they want a second opinion, what's the best way to get a hold of you?
The best way is through our website. That's firstcoastfinancialgroup.com.
All right. Kyle, thank you very much.
Thank you, Erin.